right. Hello, everybody. Welcome to another episode of Insurance 360. Keeping it rolling.
We're on the ball.
We're on the ball. Yeah, there you go.
Cheers.
Rob, welcome. Another episode.
3 weeks in.
Right? I love it. Yeah, we are right about midway point of AEP for those of you in the Medicare world, maybe a little bit past, right? Right before Thanksgiving season, we're about halfway through. It's certainly been an interesting one. We knew it was going to be interesting, though. I guess it's just like everything. You have to anticipate change.
Every day's a new day here. And I think, we've gotten a lot of surprises. I'll tell you that. I've been doing this you've been doing it longer than me. This is my 10th year.
Oh, yeah.
This is my 10th year.
Wow.
Yeah, I know. I'm getting old. But I got to tell you, I've never seen any of this stuff happen before during an AEP.
Yeah, I mean, there's been so much craziness even prior to AEP with the final rule and everything. Everyone's aware of it at this point. And then, we got to the point where sort of settled down a little bit. We were ready for AEP. October 1st comes, get the plan information, you get to start talking to your clients about it. And then carriers started making changes to the plans.
It's weird. They decided they weren't going to start paying people.
Yeah, it was, listen, there are something that carriers do every single year. Some of their plans are non-commissionable.
Yep.
Some of their plans are what they call suppressed. So for you, those of you that aren't familiar with the term, the suppressed plans means ones that are not showing up on electronic enrollment platforms like Connecture and Sunfire, which if you're using them through Pinnacle, that's your Connect for Insurance platform. So there's always plans before AEP starts that the carriers have that are either non-commissionable or suppressed.
Yep.
That's just the way it is. So when we hit the ground running, October 1st, we start quoting. We start comparing the plans. October 15th comes. We can start enrolling people. Those plans, I'll say typically, because this year is not typical, I guess.
Yeah.
You know which plans are going to be available to sell your clients throughout not only AEP, but the rest of the following year.
Yeah.
And now we're seeing changes midstream by carriers.
Yeah. And it's not just like, it's not just changes to a certain, it's not like they're like, oh, okay, these plans are now non-commissionable, right? And, that's a pain. But they're also going, well, you know what? We're going to keep them commissionable, but they're not going to be on platforms for you to quote and enroll. But if you want to enroll them and get paid, you can write a paper application, which to me is just, it's almost barbaric.
Yeah. Great point. So some of the plans are being made non-commissionable.
Yep.
Some of the plans are just being suppressed from electronic, where you have to get a paper app, to your point, and submit it paper, right? Which obviously doesn't have the same type of compliance even, I would say, when it comes to the paper. Now, here at Pinnacle, we have an enrollment room. Most agencies, FMOs, do not have paper enrollment rooms any longer. Most of the enrollments are being done electronically.
Correct.
I mean, we still have that. So that's an opportunity, if somebody wanted to sell paper, they could, but still the vast majority are done electronically. So now midstream, it's like, hey, it's suppressed. If you can find a paper app, you can still sell it.
Yeah.
And you'll get paid on some of them, but not on other ones. Some of them are just not commissionable altogether. Oh, by the way, once the first company announced it, had 5 or 6 other companies announce certain plans in certain counties, in certain states. And these aren't the plans I would say that agents aren't worried about selling. These were the plans that were being quoted. These were like the lead plans in a lot of areas.
Yeah.
Imagine quoting somebody October 2nd, and they're like, oh, I'll get back to you. That plan looks good. And then you don't hear from them. The plan gets pulled. And now that client's like, yeah, that's the plan I want. But now it's not commissionable.
Yeah. And I get it to a certain degree, but I went to a Humana event 5 or 6 years ago. And they quoted, and this was 5 or 6 years ago, that it cost for every paper application they got, it cost them like $19 or $20 to process with, having people do it and the paper and putting it into the computer and all that. So I'd imagine that cost has gone up with inflation,
Sure.
right? But we'll be safe and say $25. Like so if these plans are being suppressed, but people are writing them because we're going to have agents do the best for their clients, right? They're going to put them in the right plan. It might actually cost them just as much. And not to mention, they're not getting rid of any HMOs. It's all PPOs, which
Right.
for the past couple of years, a lot of people have been gravitated towards that PPO because it gives them flexibility, mobility to go kind of in and out of network, as well as, a lot of these carriers have national networks with their PPOs.
Right. Yeah. It's been crazy. It's really, we understand why they might be doing it, but it doesn't make sense the way that it's going down. And it's really, I don't know if breach of trust is too strong of a word, but from the carrier's perspective to the agent to the beneficiary, there's a break in trust happening.
Yeah.
Right. So the agents, obviously, to your point, want to do the best thing. They're comparing plans. Even the ones that are commissionable are now not showing necessarily on the platforms, at least not all of them, to do a comparison, right? But I guess if you know that plan's the best plan, you can get yourself a paper app and you can do it that way. But it's really leading to a lot of problems. And there has been so much that came out with the CMS final rule last year where CMS was like, agents are steering, the agents are doing this, compliance issues. And now you might have this causing more of that.
Yeah.
And it's not the agent's fault. They're trying to compare plans, pick the right plans, and then how do you sell them? It's really getting to a point where this can't become the status quo. Like clients, the carriers can't like flip a switch. Like, oh, I'm going to turn these plans off this month. Next month, I'm going to turn these plans off. Like this will be a big problem.
Yeah, it's almost like the companies are steering. Right. Because at the end of the day, they want to be profitable. And I guess, PPOs obviously aren't as profitable as the HMOs. But at the same time, I will give a shout out. Humana has stuck by and said, we're not making any adjustments. We know that, our competition has done that. They're not touching any of their plans.
Yeah, no, that's true. And
including their PDPs.
Yeah, it's, I think we saw the first regional carrier do it, but it's been more the national carriers that have done it. And some of it is just one plan in one area, and okay, we get it. But a lot of them have been a lot of plans in a lot of areas, and it's leading to certainly to a lot of distress amongst the agents in an AEP where we already knew there was going to be so much turnover. That we already knew there was going to be so many clients that were going to have to be moved into changing plans. There were so many more SARs out there than there were before. There was already all of this going on, and then this hits. And we understand. I mean, we know that we talked about this on other episodes, but the funding changed dramatically.
Yep.
The PDP with the Inflation Reduction Act, the cost to the carriers changed dramatically. But these were your plans you filed that you put forward. It really is disconcerting if this becomes a trend.
It's not good. And it's not just like, look, at the end of the day, I mean, we have agents that write stuff all the time that are non-commissionable to help people, right? Because they're doing the best that they can. But if they can't find the best plan available and they have to, run all over the place to try to find it and then not be able to even write it, because look, let's be honest, we all do stuff remotely. I mean, I have plenty of clients. I don't ever see people in person. I see maybe 5% of my people in person. So, to have to get that paper app, then you're adding a whole other element, like, going old school, right? If they're 3 hours from you and you can't drive there, now you got to mail them that scope of appointment. You got to mail them the application, have them fill it out, and have them mail it back to you. So now you're talking crunch time. If this is December 5th,
right,
you might as well, good luck with the USPS, right? But I mean, there's a lot of hurdles there. And I really do. I agree with you. I really hope that we don't see this as the norm, because it's at the end of the day, it's not commissionable for agents. It's going to be harder for them, but it's going to hurt the clients.
Right, which is what we don't want to have happen, and it's not what the agents want to have happen. Certainly, CMS is not going to be happy. I think the carriers are doing this, although it's probably a good segue. We had the election this year, and it does look like we're going to have a new head of CMS, Centers of Medicare and Medicaid Services.
Familiar face.
And Rob, you want to do drum roll? And it is
Dr. Oz.
Dr. Oz. So mostly when these nominations for all the different departments come down, unless you're really involved with following politics, you typically don't know the person, who they are.
Yeah.
This year's been a little different.
Yeah.
with some of the nominations.
He's definitely put some people in place that we've seen before or have heard of.
Yeah. So Dr. Oz obviously is a real doctor. I mean, first off, let's say that he is a legit doctor, but he was a television personality. I think he even had his own show for a little bit.
Yeah, he was on Oprah.
Right.
Then he had his own show. And then, he he got beat out by Fetterman for the Senate seat in Pennsylvania.
He ran for Senate in Pennsylvania, and he did lose that the last time around. So he is going to be the head, if confirmed. Obviously, they got to go through a confirmation process, but if confirmed, he'll be the head of CMS. So the current head of CMS, if those of you who don't know, Chiquita Brooks LaSure. And we all know, if we've been in Medicare the last couple of years, there's been a lot of issues, really not great for Medicare Advantage, right? There's been tons of changes, funding changes, star rating changes. It's all been about the money. We talked a little bit about why the carriers are sort of suppressing these plans. Funding has changed. Yep. The one thing we know, if we go by what we've seen from Dr. Oz, different things he has said, I even saw a really good YouTube the other day. It was specifically about Medicare Advantage. Dr. Oz, from what I can tell, is a fan and is going to be an advocate for Medicare Advantage. So we think that's going to be good for our industry.
Yeah.
Right?
Yeah. And I mean, look, if anything, we talk about elections and who's in place, right? I will say this I believe in laissez-faire when it comes to a lot of this stuff. Yeah, obviously you need regulations, but I think certain things it doesn't need the scrutiny that you need, right? And over the past 4 years, right, all we've gotten has been scrutiny and more and more
It's one thing to have some guardrails in place. Yeah. It's another thing to just put up roadblocks all over the place.
Yeah, and I hope that with Dr. Oz, with Trump coming into office, we will see a little bit more. And I think we did see that from 2016, when he took office. Sure. We did see pulling back, the scope of appointment, 48-hour rule going away, some of those things. And, obviously it was...
Even all the extra benefits from Medicare Advantage came from the 2018, if I'm remembering correctly, CMS final rule during the Trump administration, where all the extra benefits like the transportation and whatnot, that's really where they came to be. And they are very popular. Yeah. I mean, there's a lot of looking at there, but I think that's where Dr. Oz, being a medical person, where Chiquita is really a public policy person, right? She, lack of better term, she's more of a bureaucrat, right? She's about running a big organization, looking at probably numbers and different things like that. I think there'll be a more holistic approach to what makes sense for clients. I have no doubt they're going to look at the cost in Medicare. I mean, that's certainly a big expenditure in government spending. We know this. We've seen Doge coming down the road with the
Department of Government Efficiency.
Yeah, so we know that there's going to be a concerted effort to control costs across the government, which to a certain extent probably makes sense to have that. I think I heard the Defense Department, I think it's 8 years in a row they failed their audit. They failed their audit. They're like, that $4 billion, we're not really sure what that was spent on or where it was. So those are the kind of things that I think are going to be looked at, right? As opposed to we're going to make it really hard for people to sell Medicare Advantage. I think that is going to be something, if you go by what Dr. Oz has said historically, it's going to be shored up. right?
Yeah.
Those kind of plans where there's preventative measures, there's all kinds of things you can do to help keep people healthier. And again, they're going to look at cost and those kind of things, I'm sure. But I think we are going to look at a more positive approach to MA going forward, which is great.
Which it makes sense, right? I mean, the carriers are taking over the clients over the government, right?
Right.
They're in charge of the care. So like, I feel like it's a win-win. The carriers are taking care of the clients. The government is just kind of saying, all right, here's some money per client.
Sure.
Take care of them. And I feel like it's less. It goes back to the laissez-faire piece that I like, is that we're kind of letting the companies that know what to do it.
Right.
Right. And you're not having that government control, which, in some industries it makes sense. And in some aspects, having the guardrails, it makes sense. I think for Medicare Advantage, it flourishes when you let the companies do what's good for the clients. Obviously, they still need to be in green every year. We know that. But the more people they have, the more they're going to be in the green, and they're more willing to have those extra benefits.
Yeah. We've seen the plans getting better and more robust year after year. This is probably the first year where we feel like there's been a pullback in the benefits, probably based on the current environment and what we're seeing with more plans being pulled. They probably should have pulled back a little bit more on the benefits. Yeah. I mean, if you ask them, they'll probably tell you that they should have done that and maybe not tried to still be as aggressive as they were with some of it. But that being said, I agree with you. I think we're going to see some more free market, right? Yeah. Choice. Medicare supplements, we still sell a ton of Med Supp. I mean, still good products for many clients. That'll be the way a lot of your clients are going to want to go, and that's fine. But we like the idea of choice, like the idea of free markets. Competition spurs on, in every industry, we see competition making things better. Yeah. Right? As far as what the client gets at the end of the day, because the companies are competing for market share, right? But it's got to make sense, right, financially.
Yeah. And I think... I'm for the first time that we've been doing the podcast this year, I feel hopeful for our industry. I really do.
They definitely, we definitely, I think are going to see a light at the end of the tunnel here coming for the next 4 years. Hopefully we're right. Hopefully we're right. That's what we feel. And it's pretty important. We talk about health insurance. We've done so many of our episodes this year about cross-selling, looking at other products like hospital indemnity and cancer and standalone dental, vision, hearing plans. But something that I want to bring to the forefront today, which doesn't get talked about as much, is long-term care insurance. It is Long-Term Care Awareness Month. So if you're on social media, you probably have seen some of the advertising out there. I know us as an organization have a long history in long-term care.
It's where we started, right?
It's really where we started. It's not the same market as it once was. So we have a special guest today. I was able to grab a couple of minutes out of his busy schedule, but our senior sales director who oversees our annuity life LTC, which really is combining more and more than ever before, Greg Yodis, to join us a little bit here today, just to talk about what's going on with long-term care. What are some of the options out there? What are we seeing in pricing? What are we seeing in underwriting? And I'm going to get right from the horse's mouth. Get Greg to tell us a little bit about what are the opportunities with helping different kinds of clients with long-term care. So we're going to cut to a quick little interview we did with Mr. Yodis.
Oh, I'm intrigued. Let's hear what he has to say.
All right, everybody. Special guest interview here on Insurance 360 today. I'm with Greg Yodis from our Pinnacle team here, who runs our annuity, life insurance, and long-term care, which these days kind of goes together in many ways. A lot of the similar products going on right now. And it is Long-Term Care Awareness Month, right? Yeah. So I know there's a lot more promotion out there that we're seeing. Really curious if we're actually getting more individuals asking about it just because it's Long-Term Care Awareness Month. Is it bringing is it bringing that awareness more to the forefront for the clients, or is it still, if an agent brings it up, then it's getting talked about. But if they're not bringing it up, then maybe it's not getting talked about. So, from your perspective, talking to agents and advisors all day, every day, which is what you do, what are you hearing in general, especially from those people that are talking to you about cases they're working on for LTC?
Yeah, I mean, there's definitely agents that talk to their clients about LTC and are pretty comfortable in that arena. But in a lot of cases, what we find is that the clients are actually coming to their agent and saying, "Hey, I need LTC."
Somebody, that's a big change, because I remember it used to be, I'm not going in a nursing home. Take me to back, hit me in the back of the head with a shovel, and I'm not going in there. So people didn't even want to talk about LTC back in the day. But clients bringing it up, that's pretty good. I like to hear that.
Yeah. I mean, with the cost that's involved in it, it's really something that if you don't take care of it, you can really dwindle your retimement savings if those unexpected costs
Somebody's
happen.
got to cover those costs, right? Yep. Because we know how expensive it is to go not only in a nursing home, but you're looking at things like home care, right? Which obviously a lot more people would rather stay in their home than have to go into a nursing home or an assisted living facility. Typically, those are situations where, right, the person is at a point where they really need that around the clock care. Right? But home care, big option still.
Big option. And I think when you talk to most people, like you said, they rather be in their home. So, it's just a little bit of a shift in mindset. When people think of LTC, they think of the facility. But home care, assisted living, that all falls under the same scope.
Yeah, we don't say nursing home coverage, right? We talk about long-term care. And when you frame it in a way that, hey, long-term care, if you have it and have the coverage, it will keep you in your home longer, which is what you want.
Yes.
So it's really the benefit of what the clients want. But I think the agents got to make sure they're framing it the right way. And when you talk about cost, there's a lot of different options with long-term care, right? It's not just traditional anymore.
Just traditional. I mean, we're seeing an explosion in just the hybrid life LTC products. We also offer annuities that have LTC components to it, which we're seeing a lot of people wanting to utilize and make sure that they're protecting their retirement savings for, like you said, those unexpected costs that happen later on in life.
Yeah, and with those cost differences, when we're talking about life insurance, we're talking about annuities that have long-term care coverage. What we've seen is the funding is different, right? It's not necessarily the same way, and you're getting more benefits than just maybe a traditional long-term care might offer. When you have life insurance, you obviously have the death benefit. When you have an annuity, you might have the opportunity for a guaranteed lifetime income that come along with it. You have interest growth, right? It's actually growing, giving you more money maybe in the future to use for a variety of things, not just long-term care type services.
Yeah, biggest drawback of traditional LTC has always been if you don't use it, you lose it. And a lot of clients think, hey, if I'm never going to use it, I don't want to lose it. So the other products give those extra benefits that across the board, depending on your scenario, can really benefit you.
Yeah, absolutely. And also the underwriting is also always a big concern when we talk about long-term care. It's interesting when I asked that question about our agents bringing it up or our clients asking about it, because a lot of the times if a client's asking about it, it's maybe because they're in a situation where the health isn't great. So now you're having that conversation of somebody that wants it, but can they get it, right?
Yeah.
Can they get a traditional, or they have to look at one of these other options that are available? So talk a little bit about those underwriting differences that we see with the different types of products.
Yeah. I mean, so, traditional LTC, probably a little bit more stringent underwriting when you're looking at that. The life, like you said, it's a little bit more traditional life underwriting. So it's a little bit easier, and then you get those extra benefits. And then, all the way down to the annuities that we can offer. We have a product that there's no underwriting, but you still have those benefits.
That's what we're talking about. But I think a lot of times people think long-term care, person's not in great health, it's going to be too expensive, they can't get the coverage, and they kind of move on from that. But I think that's a really important point to drive home, is that there's a lot of options, and it's really about talking to our team, really about the case design, right? And doing that fact finding. It's not just my client wants long-term care. It's here's some of the health conditions they have. Here's some of the opportunities you have to fund that, maybe an annuity. It would be something like a CD they have sitting around where you could fund something like that. A traditional long-term care plan might not have some of those options, and it could be pretty expensive.
Yeah.
Yeah.
Yeah. I mean, given the person's situation, I think we could find something that covers their LTC costs, depending on whatever their situation is. So definitely give us a call. We're glad to do the case design and find the product that fits your need.
Yeah. And one of the products we've seen grow in a lot of popularity, it's a standalone product, but it's a short-term care plan. And for those of you that haven't looked at short-term care before, think of a traditional long-term care plan, but the max is no more than 1 year worth of benefit. And the underwriting obviously is going to be a lot less. Costs are going to be a lot less, which is going to be an option for clients out there as well.
Definitely. Again, finding the right situation given their goals and objectives. But yeah, like you said, that's a perfect situation where you can lower your cost and still cover your LTC.
Yeah, exactly. And just remember, just like most health insurance, you don't always have to cover everything, the entire exposure, right? So if you're thinking the average stay in a long-term care facility is going to cost, X amount of dollars per day or per month, what are the averages? Like 9,000 now or so?
I mean, national average 9,000 for an LTC facility, about right around 5,000 for assisted living or in-home care.
Right. So looking at a cost for 9,000 and saying, wow, that's too expensive, let's not do LTC. Well, maybe they can afford 4,500. Maybe they can afford 3,000 a month, right? Having something many times is better than having nothing, right? At least you have something assisting with the overall cost of care. You're sort of, pushing that risk off to the insurance company for a part of it, and this way the client doesn't have to take all of that risk.
Yeah, that's a definite way to protect your retirement assets or whatever you saved, and from those unfortunate things when you get sick. To have some coverage, like you said, is better than none.
And we're all getting older, living longer. We know the drill, right? We might be living longer, but it doesn't mean that we're not going to get some kind of illness, right? Nobody knows what the future holds. We could be as healthy as we can be today, and 2 months from now, somebody has a stroke. Right? Something of that nature. Maybe it's just home care that they need. So maybe a short-term care plan would be a good option. Maybe, a hybrid option like a long-term care with life insurance or with an annuity would be a good option. Listen, if you're young and you've got funds, traditional LTC is going to do the best job for LTC. I mean, that's the bottom line. We know that.
Yeah.
We know that. But just like everything, that might not fit every client.
Correct.
And that's what we want to really kind of drive home, is that there's more than one way to help your client with LTC.
Yeah, you definitely have options to do that.
Yeah, no, it makes a ton of sense. Now, as an agent, something to keep in mind is when you're selling traditional LTC, you've got to do some extra training.
Yep. They do. You have to go through the LTC certification. Make sure you're up to date on all the ins and outs of LTC. So that's just a small hurdle to get through, but to be able to offer that to your clients when they ask, or if you're talking to your clients and you want to push it to them and make sure that they do it.
Yeah, and it's typically pretty easy to do the certification. It's just like a CE training. I know we have that available through our CE platform. And honestly, if you've got a case you're working on, you need to get that done. I don't even know. We can probably even handle, we have vouchers that discount those and those kind of things.
Discounted CE, yep, definitely do it. It doesn't take too long at all. And like you said, it's a continuing education. So,
right, it counts as your CE credits, which you're going to have to do anyway. So it's just another course and another way to handle your traditional CEs that you're going to have to do, and it gives you the ability to sell those. Not every hybrid plan is going to require the training, but it makes sense if you're going to be talking about long-term care to probably
have
that done.
Just to make sure you're educated and up to speed on the different terms and things. But yeah, you're correct. Some of those, if it's not a traditional LTC rider, you don't need the LTC certificate.
Yeah, exactly. But nothing's worse than having a client that's saying, sell me something. And it's like, well, I got to do this training, and I got to make sure I get set up with this company now, and I got to get, now you're 3 weeks later before you can actually put pen to paper or e-app. It's probably mostly e-apps at this point. Are you seeing any paper apps on long-term care coming through?
Very few.
Thank God.
Yeah. Just makes life easier. No NIGOs. You have all the information you need to make sure before you submit it. So makes life a lot easier.
Yeah, absolutely. Yeah. So at the end of the day, I think if we're going to be trying to do the best job in helping our clients with all their different health insurance needs, long-term care is one that should be a checkbox on what we're talking to our clients about, right? Yeah. I talk to them about this. I know we've even come up with a form that if a client's not interested in long-term care, you can actually have them sign that form. Just something that's a little bit of a CYA, because that's a big exposure. Obviously, sure. if you need long-term care and you've got assets that are going to be depleted because of the cost of long-term care and you don't have the coverage, just showing that you talk to your clients about it.
You talk about being a trusted advisor, and if you're not talking to them about it and giving them those opportunities, you wouldn't want to be in a situation where something happens, the family comes back to you and said, hey, why didn't you talk to my parents?
Yeah, 100%. 100%. Yeah. So remember, if you're an agent and you're working with clients, typically 50 and older, 50 to 60 sweet spot when you got underwriting, but there are options even when you're talking the 60, 65 and older marketplace. You want to contact our Annuity Life LTC team. That's all they do here in the office. They'll run all the illustrations for you, right?
Yep.
You guys handle underwriting questions?
Underwriting questions, anything you need, we're here to assist you and make sure that it goes smooth and you know everything you need to know.
Yeah, and then the processing on the enrollment and the application will come through us as well. So everything from submission to commission, as we like to say, we handle in the office. So remember, contact Annuity Life LTC team. You can find Greg and team on our website at pfsinsurance.com. So please reach out if you have any questions, and we'll help you out. So, Greg, thanks for joining us here, giving us a couple of minutes. I know you're probably busy with all those LTC calls that are coming in, but you're meeting with clients, give us a call. Thanks again, Greg.
Thank you. Thanks for having me.
All the different choices that are out there, and just like anything, you need to have somebody who's the expert help you with that. And that's where our team, if you can come with them with a client with a little bit of information about them, they can really put together a really good plan to help you get that client into what's best for them, into something anyway, right? That can help with some of these costs.
I think the long-term care, it's just like life insurance in that, especially if you're younger, you're not thinking about it now.
Right.
Right. And this is when it's going to be the cheapest for you. It's when you're in your 20s.
You can't wait till the house is on fire, right? And you just can't wait till the flood happens. You got to, look at it ahead of time. People worry about the cost, all those kind of things. That's where the target market is probably 50 and older. Yep. But we can definitely help individuals in retirement, right? That's 65 older. There's still some options out there for people, even with some different kind of health concerns. So call the team. Greg is standing by with the rest of the team.
I feel like we should have one of those old school 90s pop-ups,
yes.
Like it's call now.
Exactly.
She's gonna add this in. You guys are gonna see it. It's gonna pop up.
No doubt. Yeah. So a lot going on. A lot of things going on with Medicare. A lot of things going on with health insurance. I'm sure there'll be more to come over the next couple of months with changes. OEP is going to be huge this year. I think it's just going to be crazy.
Tons of movement.
Yeah, I think there's going to be tons of movement. So if you have questions, reach out to the team. Otherwise, I think we're going to roll today. That's going to be the end of our episode. Appreciate it. Thank you again for joining us here on Insurance 360. It's been a good year. Yeah. Keep it rolling. And we'll look forward to our next episode. So thank you, everybody.
Thank you.